Welcome to Markets Now. I'm Michelle Rick along with Ted Seifried, Zaner, Hedge, and a higher day except for the hog market. And Ted, how much of the recovery in grains and cattle was just because we averted a government shutdown?
Yeah, Michelle, I think that was a lot of it, right? I mean, we had a lot of uncertainty in the market on Friday, which caused a lot of risk off trade on Friday. So a lot of speculative liquidation getting out of really every commodity wide. But we got an 11th hour savior in the form of an extension, basically, till November. So there is a kick the can down the road sort of piece in place that allowed for the new quarter, new month buying to come into the market from a speculative point of view, and maybe re-entering some of those positions that were lost on Friday. So yeah, I think for the most part, that's really all we had. I didn't see any tremendously bullish grain fundamentals. I will say the wheat had gotten really very oversold, so needed to have something to bring that buying back into the market for the time being, or maybe some short covering more than anything else. But yeah, I think averting that government shutdown was probably the biggest feature for what we had on Sunday night into Monday.
Yeah, and certainly agree. We were oversold with soybeans and wheat making new lows for the move. So, can we build on this, I guess, is the next question. Is there enough fundamental news to help keep this market going higher or not?
That's a great question, Michelle. And I don't think we got those answers today, because although it was a really nice up day for wheat, it still traded within the trading range of what we had on Friday. It really didn't get anywhere near the highs that we had on Friday. So an inside trading day doesn't usually give you really any solid signal in one direction or another, aside from, hey, it was a bounce off the low. And it didn't make a new low today. And you can say the same thing for corn. Well, not quite. You can say something similar for corn in the sense that it traded within Friday's range, but it really maxed out Friday's range. It got within a half a cent of Friday's low and within a quarter cent of Friday's high. So that's a better look for corn, but still it didn't give you anything that's a clear-cut buy signal there. Now it's going to depend on how we follow it up on Tuesday. Corn's going to be in a position where it can put in a pretty decent buy signal on Tuesday. Wheat can, but it's got a lot more work to do. And then the second half of that question, do we have the fundamentals to do it? I don't know. I will say for corn that maybe we have slightly better fundamentals than what we were looking at a couple of weeks ago, in the sense that our export sales are starting to pick up a bit more. We're going to see a good number on this Thursday's report because of the 1.6 million metric ton sale to Mexico that we saw a week ago, beginning last week. And then the previous couple of weeks of export sales have been picking up. They're not amazing numbers, but they're certainly better than what they had been. So that's good. Ethanol profit margins are good. The problem there is that we are worried about why those ethanol profit margins are good. A lot of that is because we have lower corn prices and unleaded gasoline prices are rather high, which means that domestic demand for unleaded gasoline, i.e. the blend, might start to falter a little bit. It certainly hasn't picked up to get back to levels that we were at pre-pandemic. So yeah, even though I don't think there's downside for ethanol right now, I don't know if there's a ton of upside for ethanol either. What I'm going to say is that the improvement or slightly improvement picture that we've had in demand here over the past couple of weeks just makes some of the USDA's numbers a little bit more believable. I'm not sure it gives us reason to say we need to be adding to those. So I'm not so sure that we're going to be talking about a tighter balance sheet quite yet. But okay, maybe it is a little better than it was a few weeks ago.
Yeah. And on soybeans, you've got harvest pressure, you've got some rain chances in Brazil now. And so those are going to be headwinds, in addition to the fact that exports are a little bit behind, aren't they?
Yeah. So soybeans with a stick in the mud, they didn't really want to stay above unchanged, but reluctantly did so by the end of the day. Yeah, you have Brazil planting early into what looks like some really very good weather. And that's a bit of a concern, because if they're harvesting early, that's going to cut into our export window for soybeans a bit. The other thing is, and this is a problem for corn too, is that you've got a lot of on-farm stocks for both corn and beans. And that is going to maybe delay our harvest lows for the sense that there's still a lot of old crop to move, or there's just a lot less bin space. Either way, there's a lot of bushels that probably still have to move. Because we're maybe a quarter of the way through harvest at this point. So, those factors, plus, like you said, export sales, I mean, they're there, but this is the time of year where we really want to be seeing these big, massive export sales numbers for soybeans in particular. This is our export sales season for soybeans. And the lack of the big, gaudy numbers, I think, is a problem. So, yeah, soybeans are lagging behind the slightly higher than expected quarterly grain stocks numbers on Friday. Certainly didn't help anything. I don't know. Tuesday's going to be interesting because are soybeans going to try to lead the way lower on everything, or are corn and wheat going to be able to continue to pull things up by their bootstraps and maybe make for some higher trade?
Yeah, certainly something to watch there. What about the cattle market? You mentioned we got the uncertainty of the government shutdown out of the way. So now can cattle go back up and retest highs, or is it all about what cash does?
It's got a lot to do with cash. I mean, as it always does. This is the time of year where we would really like to see box beef prices find their seasonal low. I don't feel like we've done that yet. I'm a little worried that we're due for a bigger correction in cattle, one that we didn't get during our summer doldrums. A time of year where we would expect to see that correction. We didn't get it. So now I'm wondering if we're going to see some sort of counter seasonal correction in cattle. And I don't think that the overall fear of the economy is completely gone. And that was sort of evidenced, Monday when we weren't able to hold on to the big strength that we saw early. Yes, we did end up closing higher, but well off the highs. The problem is you've got the U.S. dollar making new highs again on
Yeah.
Monday. Highest level it's been since mid-November of 2022. So, I mean, it's almost a year since we've been up at these levels. And we've done it in a big hurry. I mean, since the middle of July till now, this is one of the sharper rallies we've seen in the dollar. And then you had the stock market down as well. Really, I mean, we were hoping the stocks would hold on to some pretty decent strength based on the last minute deal that we got to avert the shutdown. And that didn't happen either. So you have to leave the day thinking, oh, yeah, man, what could have been a really good day for the stocks and a poor day for the dollar did not end up that way. We still have that concern in the market. I think that's still going to breed concern on beef demand. Box beef prices can continue to be under pressure. That's going to put pressure on packers' margins. So the recent trend lower in cash might not be changing in the near term. I have a hard time saying that we're going to take a new shot at highs here soon. I have to say, I'm a little bit worried that we're going to see a correction in cattle.
Yeah. And do you think the dollar is going to continue to go higher here?
I mean, technically speaking, it looks like we had a little correction, mini correction to the lower end of the channel in the dollar, and to turn around and rip higher like this today and close at a new high for almost a year. Wow, Michelle, it does not look like we're slowing down on that dollar, at least not in the short term.
Yeah, and that's a headwind for a lot of our ag markets, as you mentioned. All right. Thanks so much for joining us. As always, Ted Seifried, Zaner Ag Hedge, and that is Markets Now.